Good morning. How are you guys? I know the blunt always has to be lit before the video. I know. How are you guys this morning, man? Because the weekend does not mean we slack. Always new videos. Now, what we're talking about in this video, right? Simply market organization. Now, if you notice that a lot of time I start, I'm typically on my hour chart. All right. And I'm on the 27 right now, but like long story short, I want to look at like, you know, breaking down price with smaller dealing ranges over a period of days. All right. When we talk about like using a certain dealing range or how to know what is going to be helpful based on your trade plan, you need to come in here and actually like look for a second. And I mentioned in my last video that, Hoppy talks about the 4 hour chart and coming on and seeing majority of your price swings. And if they are a certain, again, you can check um like a certain asset, ADR, AWR, and see typically how far you go in a day. Now, the euro is not like, in my opinion, I'll say it like that. The euro doesn't move too much. It doesn't move like super far, like super fast rather. It makes good moves pretty much every day. Yes, you can catch it, but not gonna lie. When you're coming from like when you trade GJ like I do, or you trade some of these other faster assets, EU and GU start to seem a little slow. I'll be honest, but you can catch it. I mean, on a good move pretty much every week. I know plenty of people who make a good amount of money trading EU and GU alone, and it's not very difficult. It's really not. Every asset we talk on or look at moves in a similar way, but again, and we're looking at like GJ versus EU, the volatility is quite different. And this is what I mean, right? On a basic level. Bro, I swear to God, you can't have a video with me in it and I have me smoking the backwood. It's not gonna work. So when you're looking at the 27, right? And again, we talk about the lower PO3s. Um, I'll write this on the screen for what I'm talking about. When you're looking at like a 27, now PO3 like -2 is when we talk about stop runs. Okay. Do you see how like obviously when we start running through 27s, we're going to go from one into the next one. Okay. And so what I want to do is I want to put on like I'm like on zero right now, so I'm not like up or downshifted. And so this is obviously the current one because we're on Friday, right? And so if I come down, I want the range above me and below me to show a certain way. So you see how obviously there was a middle DR. I can do it this way. And the additional range here. All right. Now, the very top one, obviously, you see we get filled. So these are three dealing ranges. Now, clearly, this aligns on the week. And I can even make this, and I love how creative you can get in the indicator. Equilibrium mode. Put this motherfucker on a few times. And the cool thing about the being on the 27 and having additional ranges, and there's something called the hopper ranges where you can pretty much do the same thing here. But I find this to be a lot cleaner. And so the whole point is, again, doing the math, right? Dude, I'm like, not gonna lie, when I'm in work mode, I don't give a fuck about my phone. I don't know how many text messages I got in the last hour and don't really care. Um, like I said, you learn more and more about me the more these videos go on. So like I mentioned at one point, you know, being a skateboarder, um, the way that I teach myself certain things, it comes from that. So in skateboarding, clearly not everything is first try, my guy. And the reason why I bring up like doing creative things in the marketplace is because you need to, whatever you're into, bring that same energy. Get creative. Don't get frustrated because one thing doesn't work the way you want it to, or your current model is not as optimal as you would like it to be. Get in the market and be creative. You might have been looking at the 81 by itself for a few days and find it to be confusing. Or you might have been, and I feel like a lot of people do this for some reason, like they'll go to a 729 and start trying to take like 729 fair value gap area or structure in that area on EU, not realizing that EU is not going to go through a 729 anytime soon. And this is why I talk on this. So being on equilibrium mode, it takes off all the PD arrays. In reality, all right, if this is a 27, I have on 3 ranges. Is what? Duh. Now, the reason why I'm breaking it down though, I could clearly just go to the 81 and it'll mostly align, right? And this is what I mean. I can clearly go, and I like this though. We'll come back to this in a moment. But what I like though, okay, I could do it on another one. I want to look at this differently on both. And I like this only because, now where's the lighter? Oh shit, we found it. And we feel good today, you know? Good day to drop some videos. Now here, all right, want to do this differently. Now, again, we're on 81. I want us to look at both at the same time. Clearly, it's going to do these things, all right? So, obviously, the 81 was how you can view it, and we completely play the 81 in a perfect way. I've shown you so many times on how to dominate price action, understanding the optimal range. Okay. But the biggest thing, I want you to, oh snap, we got to plug in the laptop. Let me see. 1 second. It's going to start to try to annoy me, right? Well, how dead is it in reality? Oh, you're not even dead. I don't care. Bro, how many text messages I'm gonna get? Or it might be my Discord just typing messages, probably. But now, the reason why we talk on this, right? If the math is perfect, understand that again, if price is fractal, if you understand why I talk about a wireframe versus like what dealing range are you actually using to participate, Those are two different things. You can participate from the wireframe, yes, but this is what I mean. The 81 being a bigger range, right? When you come down and you see how we're at the 81's EXT level, and again, we understand that the 81, 27 are great for same week, same day on EU. It's not going to move extremely far. It's going to take days to really get through an 81. Again, it takes 5 days to go from the downside. Took about a good, start on Friday, good 3, 4 days. Back up 2 days. It rips it. And we're in a distribution Q3 for, the last month of Q3 right now, which is July, August, and September. So we're leading into Q4 coming up. Now, big thing, right? The whole point is that the gold back levels will influence price regardless of your strategy. Regardless of how you feel about it, it can't just randomly move up or down without referencing a wireframe. So if the 81 is what you're viewing price on right now, and the reason why we have this other one and we have all these 27s on, we can actually come down here and nail shit. So us knowing that the EXT level is down here, and we have another dealing range low here. All right. So now when I low key want to color my dealing range a little more today. I think that might be a little goal. Just because I mean I see a lot of similar colors and it's routine for me. But the problem is I want to come in and say, you know what? These EQ levels. Somebody leave in the comments what like colors I should use. I mean, I kind of love the blue for fair value gap. It's just clean, you know. For like the PD arrays that we like to actually use, right? And like separating, premiums and discounts. It's clean when you see the equilibrium level have reactions versus um going straight through it like how it does here. Um, it's not hard to manage the price action from left to right. Once you hit a low, and I mean this is clear. I mean weekly profile. We'll talk about that in a moment by itself. But this is how you get comfortable looking at the logic and understanding what every day is going to give you. You're not really giving yourself a lot of FOMO because you understand where price is going and you can make a plan based on what you're given. You don't have to force it at all. So when you open here on Sunday, right, you pop down, Monday's an X. It's too trendy. A, M, and then D. So this is before we even get into other types of data about this, right? I love breaking it down this way. And again, fractal concept, right? So like the same way you could come down and just look at the session. So like was Asia X? You could find an XAMD throughout the sessions on the day. So for example, A, M, D, X. Now it doesn't even matter because realistically we're not focused on the sessions. But I'm giving you like a visual on again, just to give you a reminder. Each session is going to be a version of your cycle. Each day is going to be a version of a cycle. And this being the second week of the month is going to be a version of the cycle. So this being the first week of September, this was an X. And this was an A. Majority of the week, yes, we pop up. But look, it just goes back into the same range. It really didn't go anywhere. I'm not saying it didn't move or trend to where you can't profit. But this is way different than this price swing here. And you have to understand that. All right. You get two directions out of this week. You really don't even get too much on the downside here, and you're blasting up. But when you're interacting with these dealing ranges, you're not going to be confused based on previous price action. You're not going to be confused at all because you have so much that you can refer to in price. Now, we talked about it like this, right? Our EQ levels are the only reason why we have these teal lines. And so when we're looking at 27s, breaking it down this way, and again, it's messy with all the PD arrays on. But why I like to update myself, every single time you get to one of these low levels, you know the 81 is bullish coming from a discount, external range to market level, EXT. So when you're blasting up and you're consolidating here, what do you think you need to do? You need to pop down to this 27 and start looking for either whatever you like to do, PD arrays, right? Whatever, and run it. You have clear liquidity that 3 different times, and I talk about this every video. The failure to meet a major level, that's the best liquidity you need to aim at. Obviously, the Wednesday took the Tuesday, and you drop lower, and you take liquidity on the sell side. And once that sell side liquidity is taken, bro, this is the best turtle soup of the week. Boom. Best turtle soup. And I love stuff like this, man, because I obviously I show you a lot of the same examples, but that's because the market's really doing the same fucking thing. So if you're really coming here and expecting me to show you just a different thing every 5 seconds, why? The market's doing the same thing every day, every week. Once you stick around here long enough and I talk on this, it's hard to actually fuck it up. When you practice on go back levels, and I really think this is key for why I teach my students a certain way, go trade EU, which is slow as fuck, and you can track the levels, do it like this, get creative. Plop on, again, market structure first, breaking it down, and it's if you like day theory, need day theory, I love it for again market organization purposes. But when you're looking at dealing ranges by itself, and we say, yo, we're at a zero down here or a low. Notice my language too. Call that a zero for a reason. All this price action here, you know you're not bearish. You're in a discount. And really think about this. You can come down and do a checklist the way that I do. You're in a discount, which is basically saying you can't fucking sell the thing. And the 81 is good for the week's range on EU. So if you have trouble getting above, or my bad, underneath that dealing range low here, and the 27 and the 81 share a similar low or whatever, but the EXT level is really you know what, bro, we cannot get back down here. Once you break in to that 27 here, right? Why do I forget I have a touch screen every 5 seconds? Now, watch this. When you come up, all this is now what? Liquidity. And this is being an Asian high? Oh, no. You need to attack that anyway. So you already know that this is a good time of day for you to look for optimal trade entry, that time-based retracement. And it doesn't have to take that London low. London has that function by itself. We talked on that. A lot of people get confused because they think that price has to sweep something every time they get in, or turtle rather. Doesn't have to. Doesn't have to at all. London, we already know the time is good. London by itself can be the low of the day. And if it's not given to you low of the day, yes, it's going to be given to you if bullish during New York. And that's why these are organized for me based on color. In reality, when you see that 81 and that 27 give you all the support, yes, you can not freak out that you want the complete bottom tops. Do not abandon your idea. If you get stopped out, get back in. And I understand where you might be scared of. Let's clean this up. I understand that it might scare you around this area where you're like, dude, I'm not sure. I mean, it drops every time. I mean, huge motherfucking imbalance. I'm not sure if that's like a bearish one, but we've already talked about why you can't sell it. you're in a discount. You need to be a buyer. You already took out sell side liquidity. There's resting buy side liquidity above that. Buy stops. Smart money is loading up down here. Every single time it pops up and pops down, they add to their order. They can't put in a full order in one go. It'll fuck the marketplace up. That's when you get these huge ass candles. It would be unbalanced constantly. That's not the goal of smart money. They're trying to build orders, generate new liquidity, brand new fractal flout above and below you in the marketplace. And what I mean by fractal flout is it looks like this, right? Go and watch ICT if you forget about what flout is. And again, when you're looking at ranges like this, right? Really think to yourself, what's happening? I guess I can roll the next wood. Uh, I could start to roll the next wood in a moment. But you have sellers in here. You have buyers in here. You have a lot of people who are trying to get into the marketplace who maybe have missed something and feel like they need to um, participate. So with all this down run right here, right? You get all these people that create all this new liquidity because they think that now this is a discount to go long here. They're wrong. It's not time yet. Now, same thing here. They try to go long. It's not time yet. Now, all the sellers are loving it, right? So all the sellers are killing it. But at the same time, that's when that liquidity pops in. And they don't know that they're at the low of a go back level. So when this starts to consolidate, they think that all this is just, okay, well, another retracement to go short. Everybody here is looking to load up on shorts, and smart money is already long as shit. But all of their orders are created down here. So again, if their goal is to move, $500 million, they might come in with 100 million, 100 million, 100 million. That's 400 million right there. And they're going to drop it down one last time to complete that order. 500 million is now in the marketplace. They have no reason left to wait. And they're going to attack that liquidity and make their money, bro. And they're not going to stop until, again, the 81 is completed. Now, again, you're coming in here and we're referencing this for opportunity. I'm showing you equilibrium mode so you can see how clean it is every time we react somewhere. For example, even right there, gives you a nice small retracement. Boom, so you can go long. Look at these candles here. Gives you just enough of a break. It goes up, down, up, right at this low of a 27. But again, you're using the 81 how we talked about, so you know what the deal is. And you're forming your plan or narrative against that already. So when you see how we have a equilibrium low, you're participating from the 27s. No, EXT was hit, but you're participating from the 27s low. You could do it again here. You could pyramid that. You can. But you have to understand where your wireframe is. So I don't want you to get to a point where you're just like buying every dealing range. Don't do that. But what I'm saying is when you understand where you're headed and you have liquidity above you, you have all of these things in place. Wednesday low of the week, right? And this is again just one weekly candle in reality. Ooh, see how I put that together like Romeo. And he did a great job with his content. I mean, realistically though, I mean, if you're just looking at like the candle structure itself, like you need to be on top of that. I'll do a whole video about this, but there's a lot of content on that just in the Discord. So we'll do like a little intro video, but I'm not going to spend too much time on it. But long story short, when we're talking about price action like this, what does the whole week do? It goes down, attraction phase, and blast up. So what's really happening in reality? You have nothing but your candle body opens, right? You go lower, and that's your Wednesday low. You pop up, and you range expand, and you see where it closes, just slightly up underneath the high, just so it could form that wick. That's all it's doing. Open, low, range expand up, high, and then close. What's difficult about that? It's clean. Let's check if the computer's gonna die, because I'm lazy enough to plug it in, right? Alright, here we go. Now watch. What we're talking here, okay? We talked on how the levels organize price completely. Now let's bring it to a cleaner perspective. Do one at a time. So we can find ourselves on an optimal end. All right. Let's go, I guess, -2. So, and then we don't need equilibrium mode anymore. Whatever, man. I'll plug it in. Give me a second. Plug in the damn computer. All right. But just for having to move, we'll have to roll another wood. So, yeah, to the desk I go. But I appreciate it, bro. Everybody watching these videos, I mean, we do a lot of great work here. And I mean, not just me, but like us together. And so when we come in and we say, hey, how can we get into price here? Again, I've been on the hour chart the entire time. But like I said, I don't participate from the hour chart. I participate from the 1 minute. So we come down, and again, we have an understanding of where we're expecting price. So if the high was here, the closest liquidity to that we can work with is this Sunday high, and we get there. And even the way it's shaped or formed, rather, like in reality, it's an Asia high. And look at this. This is not like the cleanest liquidity. Come on now, bro. You have to go back and learn liquidity if you feel like that was hard to see. Okay? But this is my point. All right? Now watch. We're down on the hour. We're gonna pop it down to a 5. I'm getting better with this one. Oh yeah. Oh yeah. Nice. Again, I'm just on a mission to learn all the TradingView shortcuts. I can basically navigate it fully from my shortcuts almost at this point, but like obviously like I use a touchscreen or whatever on my computer. Um, I don't really feel the need to do a lot of clicking and moving around, but the biggest thing is again keeping like a clean set of tools. So I'll even go through like I'll do a whole video of like what tools I use and why. And like again, I keep it simple, bro. I mean horizontal lines, vertical lines, scan box, and I have a couple things I use for my mentoring, right? Like stuff I use for annotation. But outside of that, I mean, I don't use a ridiculous amount of tools. And depending on what I'm fucking with, I mean, you can do one thing at a time. But the reason why we talk on like price action this way, right? Regardless. And again, we're looking at oh shit. You know me, I always confused with I always get super confused based on as soon as I turn off like sessions or the weekend, Saturday, Sunday, I don't know what I'm looking at. So the biggest thing is again coming in and how to interact with the levels correctly. So when you come down here, obviously like this is a day of selling. So if you're on the 1 minute chart and you're scalping, this is going to be a sell side situation for you, for sure, obviously. Now, let me pull it to 15 just because it looks skinny and annoying. All right, there we go. Now it looks like it has some meat on the bones. All right. Now, when you're looking at price action, right? Clear news day, all right? So this was the news, okay? And that was a downwards move for a majority of assets. This is hard to fuck with. So that's why I say wait. Don't trade the news if you're not comfortable yet. All right? Get to the point where you're comfortable with the go back levels, with become a reliable narrator first, then trade news. Don't do that off the rip. We'll talk more on how to do that. But come on a day where it gives you a good narrative still. All right. So now when we actually produce this low of the day, or my bad, low of the day and the week here. All right. So that's in place. We've already talked about the 81, so we have that structure overall. Wow, my foot's feeling a little better today. I like hurt my foot, but I'm like trying to get my foot together. Trying to wiggle my toes and all that. It's like hard to move it a certain way. And being a skateboarder for 20 plus years will do that to you. But long story short, when we see that low, right, and we pop in and very, very, very perfect. Oh my Lord. Price never ceases to amaze me because it's so perfectly organized. People say, well, like, how do I know this is not going to get referenced again? It's liquidity, isn't it? Sure. But it's only but so much time in the week that you need to form a high and a low to it. It's only but so much time. So when you see the low of the week pop in on this Wednesday, which is what we expect between Monday, Tuesday, Wednesday anyway, this is right on time for us. And the liquidity that's offered to us is going to be, again, it's not just because we're bullish on one confluence. We're bullish because of the 81. We're bullish because we have a low of the week. We have liquidity resting on the high of that day that we could still attack. And we have liquidity resting above that Sunday high, which was close to our 81's high. So we have context, my guy. All right. So now when you pop in, that's why we're going to use our 27 coming inside of here. Now, when we actually get down here, and I'm going to make this easy for us too. We're going to play mode it. Select bars, and let's really check it out. And the reason why I say it like that is because, you know, we're really looking at price, right? Are we? Oh yeah. No, we're downshifted. I forgot. So whenever you're in replay mode, just go regular. I'll just go like 0 and it says -0. Like, go 0 and it'll be just current when you do the replay. So now this is what I want you to do. This is what we need to talk about. So now this is what's going to confuse a lot of people off the rip. Do you see how like it comes in here and without looking at the 20 or the 81 in your mind, you're thinking like, yo, hold on. We came down, we reached this 27 EQ. I'm just going to run a 3-minute chart because it's again, it's a lot cleaner. So we can see more of the what's next to us. We came down and we touched this like EQ of the 27, but it doesn't look promising this way. It looks as though this 27 that we broke in and we went kind of far. It looks as though we're just gonna, complete here or give it like a little stop run and then run downward further, right? That's what it looks like. And it's easy to mistake that again from as huge as that run was too. I mean, I understand. If you had cells in, this would have looked great for you. And again, you still get that EQ a second time, which is clean. I mean, it's really clean. If you scalped it or had cells, that's actually very easy to do. But the problem is you see where you're also bullish too. You know what I mean? So if you had that 81 perspective, and we had that. And so that's why we see, okay, well, when price starts to go above the range, we do another stop run. And that's what I mean about EU versus like GJ or, whatever. These little like retracements and shit like that, I just find personally annoying. And so again, we understand it was already a large range day from news, but when you go into this next day, right? And again, you're trying to figure out what's happening based on your dealing range. So there's a lot happening in here. I mean, on both sides. So you have liquidity above you, you have liquidity below you, but you already touched the EQ, although that's still liquidity. And you have all this liquidity here. I mean, relative equal lows even. So that's really tough to look at. And so, although you have to understand time and function, right? Asia low typically gets taken by London. It normally gets more like attacked, you know what I mean? But us having a reaction like this is pretty nice to look at. Now, you do get another, you see what I mean? It really needs to attack that. So that's why that first one wasn't like super amazing. And you need to look for that. But you do get a retracement, right? Obviously. Now, in here, this is where I need you to pay the most attention. This is really, really terribly difficult if you're not paying attention. And the reason why we're looking on a 3-minute chart, and again, this is right where London opens, so you understand why we're here. All right. 2:57, 3 o'clock. Perfect. Now, you have liquidity resting above you. And again, I trade from a 1-minute. So even if you missed all of this price action down here, which is, let me move the whatever. So this being like going on 3:30 here, 4 o'clock. And again, that kill zone is that 2 to 5. So you have plenty of time here inside of your kill zone. All right. You kind of want to be in by 5 because you really need about 2-3 hours. Those 2-3 hours before you hit 8 o'clock, so you can make sure you can to validate your trade rather. When you get to a new dealing range, you have like 6, 9, 12, 15 minutes or so here. So this is not even really taking super long, but it's not also super short. You can come down and realize, yo, hold on. If we're in London and we're bullish right now, we already came down, took out some sell side objectives in Asia. Got it. Okay. You're starting to narrate as price moves. So you can get in on any one of these candles. And you're using the low here as a stop loss. Not saying like when it nips it or wicks off of it, you're going to just close every damn time. No, you're going to let it move. If it aggressively comes down, let's say this white candle decided to just break, and I mean even the EXT from the low to EXT a lot of times based on the size that you trade can be a little too much money for you, and I understand that. There's also a gap in here. It's also a fair value gap. But outside of that, right, your EXT is like the mental stop loss, but you need to get out in between your low and EXT if it's too far for you. All right, breaking it in half. Try it here, stop loss. You can try it again around here. Maybe update your entry, stop loss. Maybe it's one last time if you think EQ is going to do it, but don't force it. I'd rather it go back above the low again, and I try buys again. I'd rather not to just start buying low, low, low as it's falling and you get fucked over. Don't do that. Have more control over your trading. You can see where price is having trouble breaking the low again. Dealing range, trouble breaking the low. 15 minutes. That's it. And you blast up. And again, we already talked about the wireframe, so you know where the 81 is going anyway. You feel me? So you take buys in there. Okay, boom, boom, boom. Let's say I was late, all right? And we're just going to jack this thing because we already know it's a plus setup. All right. So here you go. And that's what I mean. You're going to look for the low to be touched again, EQ, not low, not EQ, low or that EXT level, and you're watching for it. So again, don't be discouraged if you don't get this candle you might be met with another entry, right? Now look, you're out of profit for a second, but watch. Now here you go again. We're supporting from the low again, right there. Oh man, we gotta jack this thing up, my guy. Let's get in there. Oh, here we go. Now we really want to see some real support here. Let's do again. Now, there you go. That EXT level. And you see how that's our previous levels order block. And you dip a little further into the gap, which is what we talked about, that fair value gap. Perfect. And you run liquidity. You're in profit. All right. Now, let's pause it. Here, this is where I need you focused. All right. You're not just going to be complacent. You're not just going to leave this in randomly, not giving a fuck. You took liquidity. You need to think about that. Think about what times these are taking liquidity or not, if this is a good thing or not. And what do I mean by that? When you take liquidity, my guy, it could fucking reverse on you. You need to watch for that. We understand the low of the dealing range is causing you to majorly support. We understand where price is going. We are bullish now. Yes. And you're in London. It is going to be a good time to participate. Around here, about 6:45 in the morning. So it just took liquidity right like close to 7 o'clock. This is a good time to take a partial, although you just got in. You just took a major liquidity. There is another one above you, so you're not going to take it yet. But you have this PM session high, all right? And you have EQ right above you. So we understand where we're going to get to. But you might want to take a partial in there, just a partial, all right? Just a little advice on the way. Now, again, we got fair value. All right. Breaks the fair value for a second, but it respects it. Right here it does. And look, respects fair value still. And look, every time it does that, now it breaks the fair value gap. And now we're out of profit as fuck. Do you see that what I mean? Do you see what I mean? That's literally what I said. And now we're fucked. Only for a second we were fucked. But you're not going to hold through that in reality. You're not. So now, pause it. Here. Do you see where, like I said, this would have been a good draw liquidity, but the time is not good. This is going to cause you issues. It's too close to 8 o'clock. It's going to give you a ridiculous retracement going into whatever, right? And then you get news. Shit gets wild. It takes liquidity. There's another imbalance down here that obviously I didn't talk about for a reason. It gets referenced during New York. So right after 8 o'clock, this is when you try again. So maybe you didn't stay for this. You got stopped out. Got it. Okay. But you have a whole nother imbalance down here. And it's exactly where we took support last time. Coming from this support level on 1058, 1060. All right. So now we are back in profit. And with the New York volatility, it brings us to that 27 ZQ. Again, 81 is how you were comfortable with this massacre here. This was an account killer for a lot of people. You don't have to be victim of that because you understand where it's going. You're not going to randomly change bias just because you have a couple of downside volatility candles. And look. Now, where are we expecting it? Previous day high and above that. Now, again, look what I said before when you have like the price action here. You'll make it to a order block level and it'll just randomly act like it's not about to get there. And EU does this shit the worst, bro. I'm telling you. It'll go all the way from that order block back to EQ and have you feeling some type of way. And you are this close from the high. And it have you think it's going to run that and then run all the way back. But that's why I like to trade certain assets outside the EU because this has the most liquidity in the marketplace. It's the most popular asset in the world. It's going to be wiki literally Sam Wiki on the Transformers. It's literally Wiki all day, up, down, on, up, down. It's annoying. And on top of that, I mean, if you understand how goldback works, time and price, do you see how there's a lot of numbers after the decimal compared to a GJ? Price has to reference so much more based on time and price before you get to from A to B. It's not that it's not doing its job correctly or that it's just annoying by default. Every single one of these candles has a objective based on time and price. Ooh, and that's another video. Now, when we're talking about this, right? It might meet another major goldback level, but you're still not going to trip. You just need to get used to whatever asset you're trading that does certain retracement styles. Like a lot of times going all the way from the order block all the way back to your EQ is rough, dude. I mean rough. And this does not take very long to do. And again, it's not a super huge dealing range, but if you're scalping this, and I mean you're in here, this is a lot of money between here and here. You know what I mean? And we get back up there, no problem, obviously. But my thing is when you're watching that live and you're just learning like how to use goldback levels, EU will fuck you up mentally like that. And that's what I talk about understanding again, like your market's environment. Like it being a second week of the month, accumulation type of week or whatever, it's really tough to deal with that. You're going to have a lot of these like consolidated moments for way too long. And you're like, bro, can you just reach the damn target? And look, you do, right? But look how annoying that is in reality. Just really think about that. That's a lot to deal with. But again, you're not unfocused on the goal, the liquidity, the real liquidity, where you need to focus at. And again, we talk about areas of participation. Now it drops down again. Now pause the video. Do you think that this fair value gap is going to work? Why or why not? And what I'm also going to talk about is, do you see like how we're talking about the wireframe? Like the 81 being like where we needed to go fully. We know where the target is all the way. Now, when these are starting to go through 27, 27, 27 times 3, yeah, I can come in and say, yo, I'm in a fair value gap level. This is a bullish fair value gap. I can use that. Why? I'm in a premium. So why would I buy in a premium? Yeah, you got to think about that. So again, I paused it for you. So you weren't going to pause the video. We're going to watch it together. Is this fair value gap going to work? Or are we fucked and going back to EQ to take these lows? Or, again, is buy side liquidity the priority because liquidity is right above us? What do you think? And again, clean PD rate, it's right in our fair value level, but it's in a premium. Should this go down and become maybe an inverse fair value gap? I'll even offer that one out. Or should this work? Oh, this is going to be a perfect time to roll the next wood before breakfast. Right after this one. Okay. Okay. Oh, now that's interesting. Now, okay, hold on. Pause it. Now, do we come down to EQ again to take the lows? And I was going to say, I mean, the way this candle's looking, it looks like it's going directly for the highs, right? Does that make sense? It looks like it's going for the highs. So, watch this. Let's play it out. There you go. It took the highs. New dealing range. But, really quick, is it going to take the lows still? What do you think? Or are those protected too? Whoop, new dealing range. And you are too close to your target. I like seeing it. I would love to see those lows get taken though. I would love to see it. But you get your target and your 81 is completed pretty much, you know? See what I mean? If you're in this dealing range above liquidity, you might as well hold it. You have another one here. At least keep the runner. Okay. Can we get to top of this one? Sure do. Beautiful. Beautiful, beautiful. And look, if you positioned yourself down here, what's difficult about that? It's not. And you can flatten it, you know? That's how you do that. That's how you run that. That's how you run that, my guy. I just wanted to give you guys like a visual example of, again, how to interact with EU, talking about optimal levels, and understanding the objective, man. The more that we talk, what's difficult about trading? Everything. No, I'm kidding. But it's just having the right information and knowing how things work in terms of function. When it becomes like right now, it's like a voluntary thing for you because you're learning. When these become involuntary, like it is for me, that's when you can come on and play video games and smoke all the blunts you want to, and the market's just another video game. That's all you have to understand. Nothing in trading is super difficult. It's either you have the right information or you do not. And you can bring your own creativity in the marketplace, just how I do. Break it down. Take the 81. Look at the 27s. Go look at the 243. Upshifted, downshifted one time, and see where where you're headed. You know, you don't have to sit there and be confused on where price is going all the time. And would people get upset that this went 10 times higher after where I got out? I don't give a fuck, man. Look how much money you would have made. We're not trying to call complete tops and bottoms, but yeah, bro, we understand where the things want to go. We understand, bro. It's not a secret, you know. Trading's not random. Algo's not random. Me being here is not random either. But I will see you guys after breakfast. All right. Now that was such a fun video.